In a system that just ain't right, gonna tear it down, gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules, I won't comply. Anarchy's the way. It's time to fly. I'll burn down the walls and break the chains, shatter the illusions.
And here we go. Welcome. I am Matt. This is the Anarchist Investor live, coming at you every Monday through Friday at 12 Eastern, talking about contrarian investment markets, the economy, and how to protect and grow your money without it getting stolen by some dirty banksters. A reminder, help me with the algo. Give me a like, a subscribe, a follow, an upvote, and share this. There's some information that can help some people, and I really need to get it out there. And obviously the algo doesn't like me because I talk some smack and I don't censor myself. And sometimes I say one word and Google throttles back my content or the various other platforms that I transmit on. So help me out there and let's get some organic distribution here on some of this information. All right, I'm going to pull down the banner. And what I had up earlier on the hold screen is the Hang Seng Stock Index. Okay, this is the casino over in the Far East, one of the casinos actually. And so the Hang Seng, along with I always mess up the name here in terms of the SSE. I believe it's just the Shanghai Composite, but it's the SSE Composite. And so the Hang Seng and the SSE have been rallying over the last few weeks to months. And the reason why is because China has been, just dumping money into what they're calling stimulus. But really what it ends up being is it's bailouts, right? And in fact, you see two big upswings here. One of which started in October of 22, ironically enough. That's the exact same time that the U.S. stock market turned around. And the reason being is because that's when bank failures started happening, and that's when the Federal Reserve and the federal government started bailing out banks. So that's exactly what was also happening in China, because they're in a really bad economic situation. And I got to say, their real estate situation in China is, I would use the word dire. It is the falling apart of a Ponzi scheme is what's happening right now. And they're trying to hold it together. So you see, the hedge funds all piled in October of 22 because there was going to be stimulus and bailouts. That gave you a little bit of rise. It eventually rolled over again because it didn't fix anything. Shit still broke, right? So what happens? Falls even harder. Now we get rumors in February of this year of more bailouts, more quote unquote stimulus going into the economy. And then we get this rally. I really think that this is going to be yet another rally that ends up failing. And it's because that it just does not address the underlying economic reality of what's happening in China. Just to give you some insight, let me pull up I'm going to remove this screen share, and I'm going to start sharing the news article here out of, it's on Yahoo Finance, but it was published by Bloomberg News today. This morning, Xi Jinping's government announced its the title is entitled China Attempts to End Property Crisis with Broad Rescue Package. And the beginning of it, Xi Jinping's government announced its most forceful attempt yet to rescue the beleaguered Chinese property market, relaxing mortgage rules, and urging local governments to buy unsold homes as authorities become increasingly concerned about the sector's drag on economic growth. You have to remember that within the Chinese economy, I believe people's net worth is like 60% their property, their real estate. And so if this part of the economy isn't working, then the whole economy isn't working. Individuals in China, and part of the reason how we got here, and the reason why I call it as a Ponzi scheme, is there have been lots of people in prior years in China that literally put down payments and were making mortgage payments every single month, and they weren't in an apartment or a home because the project hadn't been built yet. The line of people lined up in order to get, just the rights or the privilege, right, of being a property owner was so long that they were literally selling projects that hadn't broken ground. And to this day, some of them haven't even broken ground. And we're talking about people that were making mortgage payments for years and never even, just imagine you making a mortgage payment on a property that doesn't even exist yet. And at the same time, you're paying rent and buying food and paying in utilities in your own apartment that you're living in. I mean, how long could that have held up? Well, it held up for a little while, but now we're starting to see the gigantic bursting of this Ponzi scheme. You saw Evergrande, which was a large developer that ended up going bankrupt. I believe they cite, is it Vanda is the other one? There's another one that's called something like Vanda that blew up recently within China, or it's on the verge of blowing up, excuse me. And so you have like 2 or 3 of the largest developers. And you also have to remember that because China is like a top-down engineered economy, even though they have embraced elements of capitalism, there is still sorry, Vanke is the name of the company, Vanke. But there's still a lack of diversification. You have a number of these very, politically aligned with the Communist Party investors that create, whatever it be, whether it's in the real estate industry, manufacturing, et cetera, et cetera. In the real estate industry, you had Evergrande, which was the largest developer in all of China. And there was like a handful of them. And then there's not like a lot of small developers that are up and coming. There's not a lot of upward mobility. If you're connected to the Communist Party at the highest levels and Xi Jinping, you get the most support from the Chinese central bank. You get the most support from the government, right? They basically pave the way for you to be successful because they think it's in the best interest of China. But what happens is when one or a couple of these very top heavy organizations ends up falling, when these companies fall into disrepair, that's your entire economy, right? Like you lose one and you lose everything. Well, you're seeing the biggest dominoes falling right now in China. So essentially what they're doing is they're not even really necessarily directly injecting funds, say like to individual purchasers. They're giving them a break in terms of what the down payment needs to be. So like whatever percentage they had to put up before, they're saying, oh, you don't have to put up as much. Okay, that's great. I still don't have a freaking property, right? Like I can put up less money on this imaginary property that I don't have, which, by the way, there are tons of them that are sitting there unfinished. Like they started the construction project, Evergrande went down, and then you've seen these other ones fall into hard times. And a lot of the projects, they just picked up their shovels and walked away from the projects. So you have like a ton of half-finished projects as well. The money that is being directly injected into the system is going to the provinces and the local governments. And China is saying, okay, well, go ahead and go buy these properties. Like literally there's a number of properties that are out there that are either, people stopped paying on them or they were never purchased in the first place because they just were in an area where people weren't looking to buy them, right? Like you have most of the people in China, if you followed kind of some of the news stories the last couple of years, they've had bank runs and all kinds of other stuff. There's all kinds of turmoil. Well, a lot of these properties that are unfinished or they were finished and just the buyers never took possession of them and moved in or whatnot, they're just sitting there. I mean, it's analogous to like having multiple Detroits, right? Like if you understand that analogy. Detroit at a certain point had something ridiculous, like 70% of all of the housing units were basically in disrepair, abandoned. They wouldn't pass inspection, have someone live in them, right? And so all of those housing units, the city was literally giving people like a small cash payment in order to take the property if it was owned by someone, and then just bulldozing it, right? It was that was the whole there was no stimulus. It was just trying to get rid of the blight, because you also had situations where, you had squatting, you had, crack dens and drug operations and prostitution operations that were running out of these things. Like they were, just they were beyond just being eyesores. They were also areas of a high crime level and everything like that. So, and they didn't have the funds to be able to police those areas. So what they did was they put small cash payments down to purchase the property and just bulldoze it and leave it flat until maybe one day in the near future someone actually wanted to build on it and build an actual development that gets sold, right? Well, imagine that times like 10 or 100, right? Like that's essentially what you have in a number of these cities that never really got populated within China, right? Like it was all being built for people that were expecting to move in, and they just haven't moved in. And in a lot of cases, they've stopped making the mortgage payments, which is why these real estate firms are falling on hard times. So this is the brilliant fix, right? The brilliant fix is we're going to lower what it takes for people to purchase real estate, and then at least the front end, the deposit, and then at the same time we're going to have local governments become the buyer of last resort for all of these pieces of property. It's going to fall on its face. This is not a sound solution for the problem. It just isn't. This is a band-aid. And so the speculators are going to buy up the stock market thinking, oh, any stimulus is good stimulus, right? Well, this gives us the opportunity to talk about an economic, it's more than a theory, it's an economic principle, okay? And again, this is something where if you fall victim to hearing a lot of these kind of like taglines about, printing money, money printer go burr causes inflation, okay? Well, that's great, but it's not symmetric. It's an asymmetric process, okay? And it's not always an instant process. It takes time, right? Like there's velocity that you have to take into account. There's where the money flows and how it flows and how quickly it flows. Well, there's this concept of biflation. And if you haven't heard of it, it's kind of a version of something else that you might have heard that's called the Cantillon effect. All right. And so Cantillon was a couple hundred years ago, was a French economist, I believe. Hold on. Let me make sure that I'm pulling up the right tab here. Here you go. Biflation Investopedia. You can Google it if you want. Cantillon was an economist in France a couple hundred years ago, I believe. And so the Cantillon effect essentially has to do with how civilizations and how easy money, right? Like how that works. Like when the money gets printed, where does it go? Okay. So there's different variations on that because it doesn't always happen the same way. A lot of it has to do with the economic cycle or situation at the point in time where the money gets printed, right? Because you can have money being printed during good times. You can have money being printed during bad times. Those don't affect the economy and the individuals within the economy the same way, right? So there's all kinds of variations. One of these variations is called biflation. And again, you can Google this, just look up biflation Investopedia, and you'll bring this up. The concept corresponds with the idea that you can have inflation in some areas. So some things are attracting all of that money, and then you can have deflation in other areas. Now, the net effect can be it can be inflation, right? Like, so you could have extreme levels of inflation in some goods and services, and you could actually have deflation in other things, right? Like housing prices could go higher, right? And TV costs could go down. But net on net, if housing prices go up more than TV costs go down, you get inflation, right? It's difficult for people to understand because a lot of times when they're conceptualizing these things, they're conceptualizing them in terms of just the basic idea of, things go up, things go down, and they just assume nowadays that things go up together. And that's not true, right? That's when people buy ETFs and mutual funds and they see the commodification or the ETFization of the casino, that's what they assume, right? Good times, my stocks go up. Bad times, my stocks go down. They even go as far as not even looking at what stocks they have versus what the broader casino did, right? Like the casino's up 20%, you're up 8%, and you think you're making out like a fiend, right? If you never do that comparison. Well, things don't go up the same way at the same time, right? It just seems intuitive, but at the same time, in practice, a lot of people don't even think about it, right? Well, biflation is this idea that you could have certain parts of your economy that are just, or certain assets that are literally stagnating or even falling in price, while you have other things that are attracting that newly printed money. Well, I think we have a perfect example of that happening, not just in China, but around the entire global economy. And this is what makes me say this. We have entered into a phase. And before I even pull up this chart, this is something that people also have to understand. And there's a very poignant interview that I saw earlier this morning. I think it was on Bloomberg, and it was a economics professor of all people from China, and he basically made the point that he didn't think that these interventions were going to work simply because people were gun shy, right? Like, think about it. You put money down on a property and you're paying on it, and for years, and you never got the property. So you stop paying on it. Does it now matter that, the down payment on the next property that you may or may not get is lower? No, you've become psychologically averse to investing in real estate, right? And so if these effects have long lasting effects, which we know they do, like if these results of this type of investment process or system has negative effects on individuals, just look at what happened after 2008 in the United States. After 2008 in the US, a lot of people just became completely displaced from the real estate market. They were just like, you know what? That blew up in my face. I'm not going to do it again. Right. And they become probably perpetual renters for the rest of their life. It's probably also part of the reason why housing costs and rent prices are up so high. It's because a lot of people swore off buying homes. Right. And I can't blame them because, look, we did nothing to help the supply problem. Right. But that's a story for another day. But just look at the psychological downstream effect, right? That second order effect of what happens after you have bad performance in certain types of investments. Do you think people in China are going to be lining up now to buy units in some of these places? And just outside of the psychological effect, think of the realistic value proposition, right? Like, oh, you have a half built unit and I can put a lower down payment on it. How long has it been half built, right? Like, how many cockroaches are living there that I have to shoo out of the way before the builders can come in and finish the unit, right? You had that problem in Detroit. You had that problem with all of the uh, homeowners associations in Arizona and in Texas and some of these places, California, where there were just huge swaths of homes and just no one was living there, right? After 2008. Same deal. Who's coming in to buy those units up if they've been sitting dormant? Maybe they have, I don't know, maybe they have mold problems, or, maybe they could never pass inspection no matter how much money you put into it, right? That being said, money goes somewhere, right? So just because people aren't buying real estate, or they're psychologically harmed and therefore they're going to continue to be averse to a certain type of investment, it doesn't mean they stop investing. The money goes somewhere, right? So here's where it looks like it's going. All right. This is the price of silver, man. Talked about this yesterday, right? Copper continues to be strong too. It's having another update. People are buying things that are actually something. Okay. Now, granted, when I'm looking at this chart, I'm looking at the paper market of silver. Okay. I wish I had some silver in front of me. I had to deliver one of my giveaways yesterday, so I lost my example silver coin. But they're buying things that actually they can hold and possess, right? Like, this is why I've been trying to make this point that the investment environment over the next 40 years is going to be a lot different. The risk-taking activity that's going to happen in the economy is going to be very boring. But the reason why it's going to be boring is because people have spent the last 40 years buying, like, figuratively, they've been buying the apartment that they can't possess yet, but one day might be able to get, as long as they continue to pump money into it, right? That's a huge risk. If you're buying something that you can't take possession of anytime soon, and you have to continue to put money toward it, like Chinese real estate buyers, right? That's a huge risk, right? There's chances you never get it. Well, I think there's going to be a dramatic psychological shift on the part of the average person, whether it be in the United States or throughout the entire world. And you're seeing it play out in things like gold and silver, right? Silver's up strong through 30, took a little bit of a leg back, some profit taking after it almost ticked 30. Now we're through, man, right? If this thing continues through, and again, I want to see after this thing pops through, I want to see it take another little tick back, revisit this $30, hold it, and move higher. If it does, man, off to the races. It'll be $35 or $40 before you blink. And it's because, I mean, the Chinese central bank already knew this. Chinese central bank has been one of the top buyers, and China is also one of the top producers of gold in the entire world. And they've been buying gold hand over fist, relative to the recent past within the last 2 years. That's part of what's been driving these prices up. It's eventually going to sink in to the average investor. The average investor is going to stop buying meme stocks and buying Nvidia, and they're going to start looking at gold, silver, cash, US treasuries, utilities company. What's funny is the very beginning of The Big Short. If you haven't watched The Big Short, watch it, okay? Absolutely fantastic film. At the very beginning, the narrator is telling you about how the bond department in the bank, in the Wall Street banks, used to be comatose. It used to be boring, right? And there's actually, if you listen to, there's like, while the narrator is narrating, there's also like action that's happening where a guy walks in and sits down at another guy's desk. He offers him a cigarette, and he's like, "For you, I've got treasury bond," like his great idea for the client that just sat down next to him. He's like, "What I got for you is utility stocks and treasury bonds," right? And this is while the narrator's telling you that the bond department is comatose. It's boring, right? Well, guess what? We're about to return to that time period. We're about to return to the time period where boring, but things that you can actually possess and are dependable and lower risk are going to be what people flock to, because you're already seeing a large portion of the population in Western economies that the economies are not working for them, right? And so there has to be a reset. There has to be a revaluation of debt. There has to be a huge rise in unemployment. It's coming, like it's due. It's just a matter of what happens after that. What happens after that is a lot of it, the psychological effects of what's going to happen during the financial crisis. And this financial crisis is going to cause a lot of people to get really boring with their investments, because the people that don't even know how to spell risk management when it comes to investment, dude, they're going to hurt worse than most folks, because, there was already anecdotal stories. I think, who is it? The one dude's called like Kevin, Meet Kevin, I think is the YouTube channel. I saw a video of his earlier today, and he was talking about how like young guys, like in their early 20s, are like losing jobs, and they have like a couple $100 to their name. And so that's the reason why things like GameStop are popping off. They're not buying gold and silver. Old boring people buy gold and silver, right? They want to buy the lottery ticket. They want to buy Bitcoin. They want to buy GameStop, right? By the way, this is how GameStop is treating people today. This is like, this is a weekly chart. Someone bought up here. I think, like, if you're young, okay, if you're old, you probably understand this, right? I should hope you understand this concept. If you're young, you have to understand on every side of a trade, when you buy something in the casino, there's someone selling it to you, right? And either you're right or they're right. Okay? Someone bought GameStop this week at almost $65 a share. Right now it's trading at $20.50. They lit 2/3 of their money on fire by buying the top here, because they wanted to be some kind of like, how should I put it? Like, they wanted to be the hand of God that was going to rain damnation on the dirty Wall Street bankers. And the one thing that I tweeted out the other day was, sometimes you got to realize that the game is crooked, right? It's rigged against you, and you can't win. So the only way to win is not play. Well, there's people out there that are desperate, and they're throwing maybe what amounts to their last $500 on, Robinhood, and they're buying GameStop, hoping that it goes to the moon and that it fixes their financial problems. Right? That's the point we're at right now. Those are the disenfranchised. Those are the people that are going to swear off the riskiness of this market, but they're not going to swear it off yet. Like, things have to get a lot worse first. And then when they do get a lot worse, the tail end of that in 5 or 10 years is going to be that kid who's 21 right now, who's losing their shirt on GameStop and AMC and all the like, when Bitcoin actually does finally reset to what I think will be a much lower price, when the crypto marketplace resets to a lower price. You're going to see those individuals that were so hot and heavy that thought they were going to 10x, 100x their money. All of a sudden, that 21, 22-year-old, after 5 or 10 years, when they're 27 or when they're 32, they're going to be like, oh yeah, buy me some Hawaii Power and Electric stock, right? Give me that 5% dividend yield, because they'll feel like they can actually depend on it. And I'm not telling you that you need to do that. I'm not a fan of the casino one way or another, okay? I would say if you do play in the casino, be extremely conservative, because crap like this happens all the time. Stuff gets completely overinflated, and the people with really deep pockets know that it's overinflated. They know they're selling you something that's overinflated, and they're laughing the entire time. They light their Cuban cigars with lit $100 bills, okay? It's funny money to them, because there's just so many suckers that are just chasing the action, right? And they're more than happy to do it. That's why I call it a casino. The casino always wins, because the game's rigged against you, right? Sometimes you win. A lot of times you lose. Well, what's going to happen with Chinese property investors? It's the exact same thing. They ain't going to put their money into property immediately. It's going to take a long time before that generation of people that got burned by those supposed pieces of property that they were going to get, before they reallocate their money to that. So what are they going to buy in the meantime? Boring stuff. Gold, silver, utility stocks, right? Unfortunately, I'm also worried that this kind of dynamic is going to play out in our society, and it's actually going to harm entrepreneurship as well, which is unfortunate, because typically during financial downturns, that's usually when billions of dollars are made. It's when the people that don't lose hope, dare to dream that something better can come in the future. Usually during those financial downturns, the seeds are sown for economic prosperity 20 or 30 years down the line, right? You have to have vision. You have to be in a good mental state to be able to believe it and see it, right? And you have to be willing to take an educated risk, as opposed to just buying a lottery ticket, right? Now, the other thing I'll say is, and this is kind of shameless self-promotion, but you should definitely go over and subscribe to the Anarchist Investor Substack, because today I put out a preview article, and over the next week, I'm going to write 5 articles about surviving the next financial crisis, because it's coming. I mean, it's probably here already. Like I said, I think we're probably already in recession. Some of the early indicators, economic indicators that we've seen come out of the government, even with their doctrine, has showed that we're probably in contraction already. And net on net, you see really wealthy people doing well and still continuing to spend. They're skewing the numbers. When probably net on net, we're actually, going down. Not like collapse, but we're going into recession if we're not already there. Well, that next financial crisis, what does that look like? How are we going to prepare for it, and how are we going to create a method of operation during that financial crisis? I'm going to hit on physical health, mental health, basic expenses, like making sure that you have the minimums, the needs, the actual needs of life, right? Then we're going to talk about basic investing, and then we're going to talk about growing wealth long term and sowing those seeds. Okay. But so that's going to be over the next 5 weeks. If you're not sub to the Substack, even if you're not a reader, dude, I can't tell you, it's going to be important, man. This is like, I'm basically building my own playbook, right? But I'm building it along with everyone else. And I want to hear feedback too. So like, I want to see your comments on those posts, or even when you come to the lives Monday through Friday. Let me know what you think when you see those posts come out. But from that standpoint, I'm also giving away on June 3rd 4 yearly annual paid memberships on June 3rd. And that's whether you're a free subscriber or a paid subscriber. So if you already bought a year, you get comped another year on top of it, which is fantastic. And I'm about to come out with the model portfolio, which, by the way, that model portfolio is also going to be something that is going to prep us for this financial crisis. It's going to prep us for the places where there will be opportunities. Remember, biflation. We're going to see tough economic times, and then we're going to see inflation afterward, because that's always what happens. Central planners overreact, right? They overreacted in 2020. Some would say that, well, I might say that overreaction was planned way before 2020 even happened, but they overreacted in 2020. And this 2024/2025 recession, it could be a lot worse depending on how the chips fall, right? But this recession that's coming up, they're going to overreact again. And so, the inflationary cycle that we've seen the last couple of years, I think there are really good arguments to say that wasn't that wasn't quote unquote real inflation. It was partially inflation due to debasement of the currency, but a lot of it was supply chain disruption. This next wave of inflation is going to be actual inflation. All right. And that's why, people are buying gold and silver as well. They're buying things that will retain their value in a stagflation environment or an inflationary environment. It also acts as insurance during the financial downturn. And it also means that gold and silver will have a period of time where they'll seem weak, right? They're rallying now. People will have to sell in order to raise cash to pay for the basic expenses of life during those hard financial times. Well, that's going to be an opportunity, because like I said, that reaction is going to be, it's going to be an overreaction from central bankers and from the federal government. And it's hard to believe, but, if you could buy stock in where the U.S. national debt goes, okay, it's a no-brainer. It's going up. It's going up into the right. It's probably the only meme stock that continues to go up is the U.S. national debt. I don't see them being frugal anytime soon, because, typically when you have financial hard times is when the government spending fills in the gaps, right? That's when it really starts to crank up. Just look at what happened in the 30s and 40s. Federal spending ripped. And the reason why was because they came out all these different, social safety net programs and public works programs and stuff, which we can have an argument or a discussion at a later date as to whether or not they actually helped or not. I actually don't believe they did. But so from that standpoint, we've got a tough road ahead, right? I'm not going to go too deep into the markets today. Some things are moving. I do want to look at the crypto space though, because I'm getting super excited, because one of the first things going to roll out for the paid subscribers on the Substack is we're going to look at some micro cap stocks, and I'm also going to follow, micro cap cryptos, and I'm also going to look at the passive cryptos that I'm mining, and I'm going to create those two portfolios so that folks can see, and at least one of them will be easily accessible. The passive mining crypto portfolio will be something that has a barrier to entry. You have to actually buy the miners, set them up. There's like a techie kind of piece to it, right? But so it's fun to follow. But I also want to give everyone like a micro cap crypto like investing portfolio that we can follow along. We're not going to put a ton of money into it, because again, that's a lottery ticket. It's not a given. It's not something that's boring. It's still something that people are going to think is like, to the moon or whatever. It's probably not going to be to the moon. It'll probably, at best, it'll move sideways to down over the next couple of years. But the goal being that we want to kind of like embrace our inner Nostradamus and try and figure out which of those micro cap cryptos are going to be what makes it out of the next financial downturn and the next crypto winter that's coming up here in conjunction with it. But like I said, we could look at the crypto space really, today it's we're catching a bid. Bitcoin's up just above 67,000 right now. Actually, if I zoom in, you can see the price action a little bit better. We popped back through the bottom end of that, kind of smaller consolidation region. See that? Pop back through, revisited it, held it, and now we're moving back up. So Bitcoin is continuing to show strength here, which I'm actually also kind of seeing a little bit of an inverted head and shoulders here as well, which could mean that, we're back up in this 70,000 range. I would actually think if we get some kind of indication that the Federal Reserve's cutting interest rates and Bitcoin chooses to rally now, I think that rally is going to be one of those kind of like shooting star type rallies, and that'll be the end of this bull run. I really think that that's going to be the case. I was looking for a pullback. I actually thought it would have been healthier if Bitcoin pulled all the way back to, these support lines at like 54, 53,000. Never got there. It got back to, let's see, as low as like 56. So like I was off by a couple of grand. But at the same time, I was never advocating anyone back up the truck, right? That's just kind of price targets I'm looking at. Bitcoin, if this thing rallies right now, along with the broader market in anticipation of an easier Fed picture, an easier monetary policy picture, if they think that, the Federal Reserve is going to follow suit with what China's doing, what Europe has already said they're going to do in June, if we get a big rally off of that, that's the final rally, right? And that's time to take profit. I'm going to be looking at that really closely. I've moved some Bitcoin into the Kinesis Money account that I set up this week, along with a couple of other cryptos and things like that. And so I'm building a little bit of a portfolio there. That will be a big component of the model portfolio. Again, you don't necessarily have to do it with Kinesis Money, because essentially the reason why I'm doing it is also to test out this concept of the marriage between crypto and gold and silver. But, moving forward, if we do see a nice pop here, it's going to give me an opportunity to take some profit in Bitcoin and move it into some boring stuff, which is never a bad thing. When you take profit and move into boring things, you might miss out on future, to the moon kind of moves. But guess what? You still won, right? Like you locked in that win, and that's important. I think a lot of young investors are going to need to learn that lesson, and it's going to be a painful lesson to learn. Crypto-wise, the market cap of crypto, the total market cap of crypto is outpacing Bitcoin today. All right. So this breaks my, at least for a day, breaks my thesis that a lot of these other smaller cap cryptos are going to be left behind if you see a nice big Bitcoin run here. But again, it's only a day, right? So could just be that Bitcoin had a decent week and then everyone's trying to race to pick up some other things because Bitcoin's already run a bunch this week. You do see Bitcoin Cash, which I picked up a little bit of. I actually moved some Bitcoin into some Bitcoin Cash when I moved into the Kinesis Money account. Bitcoin Cash is up 6% today. So nice pop today for Bitcoin Cash. Solana has actually had a really decent day. I actually took a bunch of my passive mining cryptos, converted them into Solana for a couple of days, and there was a nice enough pop today where I've since moved those in to the Kinesis Money account. And so I'm using that kind of passive mining income to book profits when it's moving in my direction. And by booking profits, I'm also able to reallocate that stuff, those assets to another medium. And so in, the last 24 hours, I've moved that into the Kinesis Money and picked up some more of their gold and silver crypto coins. So should be interesting to see how that plays out. Avalanche is also having a really good day. So again, Solana and Avalanche typically trade together for a good portion of the time because they are looked at as kind of these really innovative layer one blockchains / cryptos that there's a lot of application building off of. And so, continue to watch these. These are like, I highlighted these when I wrote about like and I did an episode on it too, when I talked about kind of like the handful of cryptos that could end up quote unquote dethroning Bitcoin. Solana and Avalanche are two of those. So, and they typically trade together because they're two of at least the more notable, like, and by notable, I mean, they get the most kind of PR coverage, okay, in the mainstream. they're the most notable layer one blockchain / crypto, ecosystems that are vying for this, like, kind of trying to take over the throne of some of the other bigger cats or bigger animals out there, like Bitcoin and Ethereum. So something to watch out for. Oh, and I completely glossed over it. Ethereum's outperforming Bitcoin today as well. So that's also a big reason why the crypto space is up more than Bitcoin is. Again, I don't really hold very much Ethereum. I have to dig in a little bit more. Actually, after my talk with Patrick Smith, that I'll be releasing that interview probably tomorrow night. After my talk with Patrick Smith, I'm actually a little bit more enthusiastic about Ethereum, believe it or not, even though Ethereum isn't really as efficient as I would like it to be in terms of being a really viable kind of layer one for development off the top of. But just the fact that you have like an individual or a couple of people guiding that project just makes it an interesting juxtaposition to some other things out there that are more decentralized and seem more like a bunch of chickens running around, right? Like, and will they actually get somewhere? Like, who knows, right? So I have to do some more digging into Ethereum as far as how I kind of feel about that and what my judgment is there. But for the day, it's outperforming Bitcoin. So if you're a big Ethereum person, you're having a decent day on that one. What else am I looking at? Actually, speak of the microcap cryptos, the passive mining cryptos, mobile. Another reason why I was able to kind of move some of that stuff around. Mobile token, which is what I get rewarded for my cellular plan, took a nice pop today. About at the peak of it, it was up like 25-30%. So that also gave me a great opportunity to kind of liquidate some of those tokens and reallocate them elsewhere, which is what ended up in some of that Solana that I moved over and have since converted into the gold and silver cryptos in Kinesis. So some of the microcaps are getting a little bit of love today, and you'll see the Kinesis pairs are up, obviously, because gold and silver are up. This is the Kinesis Silver, the KAG. And for something that has just kind of like moved sideways for a while, it's starting to ramp. And it's ramping because silver's ramping, right? So it's a good sign. The silver goes up, this thing's going up, and it actually kind of looks fairly stable in terms of the way that it's moving higher as well, as opposed to being just like everywhere, right? All over the place. So I'm going to continue to keep an eye on that. And obviously I have a vested interest in it because I own some. So should be interesting to watch going forward. So that's really it. That's what I got today. It's Friday. Happy Friday, TGIF. Thank you very much for making it through the week with me. A reminder, sub on the Substack and help me out on any of the channels in which you watch or listen to this content, because it'll go a long way to helping others. And like I said, we're prepping here for what could be a really significant negative financial event or period of time. And so a lot of people can use this information. And also, the more people that are involved, the better the conversation that we could have. And so that's also important in terms of getting some additional inputs from some diverse viewpoints out there, right? So definitely help me out if you can with the algo. It would be very much appreciated. And with that, that's all I have. We made it through another week. It's Friday. You get to go have a fantastic weekend if you can get past this afternoon. And yeah, I'll be back Monday. And another shameless plug. If you don't already, follow Ungovernable. We do a Sunday night. We're actually going to be, interestingly enough, normally we talk about on Sunday nights at 7 p.m. Eastern. Myself, my wife Jocelyn sits right here, and we typically have an absolutely awesome guest. We talk about freeing yourself, but more from like a mind, physical health, spirituality kind of standpoint, making yourself not able to be controlled by others that would prey upon you if you don't have those things in balance, right? If you're not in a healthy place. And so the dude that we're interviewing Sunday night literally spent a year without money. Okay, 1 year, no money. He has an incredible story to tell. We're going to talk to him about it. It's going to be absolutely fantastic time. So if you haven't already, go check out on most platforms. If you just look up Ungovernable Pod, like as in podcast, Ungovernable Pod, We go out on, there's a separate YouTube channel, there's a separate Rumble channel. We transmit on Odyssey when the link works. You can also check us out on your favorite podcatcher as well, because there's a separate podcast with that audio. And it's usually a really good time. It's a long form interview. So if you're not doing anything Sunday night at 7 p.m., definitely check in. I would love to see you there on the live and hear your comments, and, so you can listen to this dude's awesome freaking story coming up. So with that, have a fantastic weekend. I will see everyone on Monday at noon Eastern. And with that, love you. Peace.
Stuck in a system that just ain't right. Gonna tear it down. Gonna start a fight.